Hello everyone, I'm Kunal Sodhani from Global Trading Center, Shinhan Bank, India. And let's try to understand what's happening globally as well as domestically and decode with respect to dollar rupee because we have been seeing a lot of volatility in dollar rupee pair. So starting with the numbers, the FPI flows have been positive in the last couple of sessions, which we have seen both on equities as well as on the debt front. And if we talk about the debt flows, that has been tremendous. So we have seen an inflow in the March itself to the tune of $3 billion, while we have seen a cool off on the outflows from the equities front. So net now on a year-on-year basis, like for example from Jan till March 25th, we have seen net outflows tune of $80,000, which has got reduced from almost $150,000. So a good start when we talk about the flows front, which is obviously helping the rupee to appreciate from this point in time. Also considering the March end position where the requirement of INR remains on a higher side to show a healthy balance sheet also adds to the appreciation side for the rupee. Thus, we have seen that the dollar rupee pair, moved from almost near 87.20 to 87 half odd levels and somewhere stabilizing around 85.80 as well at this point in time. But what's happening with the FX reserves? They are still around $655 billion with 10 to 11 months of import cover, which is a decent import cover with external debt there around $712 billion. So we feel that the downside, particularly on the dollar rupee pair, remains restrictive. Maybe 84.80, 85.20 acts as a very, very strong base. Maybe at those levels, in case if we are able to see, then RBI themselves should be quite aggressive, picking up pace to buy dollars from that side in order to grow the FX reserves as well as accumulate the flows which are coming into our country. So that's from the INR perspective. But overall, if we talk about the Fed trajectory also, the FOMC was very clear, status quo, and I think the upcoming policy in May also we may remain status quo. But maybe from the second half of the year, we may start seeing maximum of two cuts for the year. And Fed Powell was very clear about the trajectory. They have reduced the growth projections, increased the inflation projections, also the unemployment rate, they have increased to 4.4%. And also they have clearly stated that they are sure that what would be the status, when tariffs actually come into picture and how much impact it can actually materialize on the inflation. So that still remains uncertain, and that's also from a lot of Fed speakers as well. So somewhere I think the rate trajectory may remain on a slower end, but a maximum of two cuts for this year, FY25 basically, till December, which I mean. And on the Eurozone front, we did see one rate cut. We see there also some stabilization along with the Bank of England, where we did not see any rate cut. And we still feel the rates may remain on hold at 4.5% for some more time. On the dollar JPY pair, we remain with status quo on that front. With obviously there have been words of rate hike, but nothing as of now which is expected in the first half of the year. But yes, on the INR front, we expect RBI to cut rates by 25 basis point in the April policy. Considering the way they have moved on through the liquidity measures with respect to OMOs or buy-sell swaps and even VRRs, I think they have been very clear in order to understand the liquidity conditions and resolve those. The CPI inflation obviously had cooled off to 3.61%. Food inflation cooled off sharply within that component. Growth trajectory is still at 6.2% in Q3 FY25. So all in all, a supportive side for an interest rate cut in the April month. Moving ahead, I don't think maybe there will be a policy stance change, but possibly after this April policy, there can be a stance change in the coming policies from neutral to accommodative, and maybe one more rate cut in the second half of the year can be seen depending on the GDP numbers for Q4 FY25, which will be announced in May, and also depends on the liquidity scenario once the RBI announces dividend to the government. Again, it would be in May, where the expectations remain of 2.5 lakh crores to 3 lakh crores. So that's from the domestic perspective. And overall, for dollar rupee pair, we continue to expect immediately as a support 85.20 acts as a very strong base. While on the right side, once again, we can see levels testing 86.35, 86.40 on the resistance front. So that's all from my side, friends. Thank you so much for your time. Hope you found the video valuable and insightful. Thank you.